Welcome back to Investing Talk Podcast. Today, we're taking a close look at BTCS, a company operating in the, well, fascinating and often volatile world of blockchain technology.
Absolutely. And our listener for this exploration is someone who wants to get up to speed quickly, understand the different angles, and, have those aha moments without getting overwhelmed. We've gathered company info, recent news, and a pretty detailed due diligence report to really unpack what BTCS is all about.
Right. The mission today is to cut through the noise, understand the core of their operations, their recent performance, and the key factors that might influence their future. We'll look at the business model, financials where we have them, potential red flags, strengths, competition, and what might be next.
Okay, so BTCS, founded way back in 2014. That makes them a real early player in the blockchain sector.
Definitely. An old-timer in crypto years. And it looks like they have two main business areas.
Yeah, what are those?
Well, first is their blockchain infrastructure operations. So that involves managing validator nodes on proof-of-stake networks. Okay, so helping to run those specific types of blockchains.
Precisely. They also offer staking services directly, and they have this thing called Builder Plus operation, which is about optimizing gas fee revenues.
Gas fees, right. The transaction costs on networks like Ethereum. So they're trying to maximize earnings from that.
That's the idea. Builder Plus aims to strategically order transactions within blocks to capture the most value from those fees. It's quite specialized.
Interesting. And the second area?
That's their digital asset e-commerce marketplace. It's currently in beta, a platform for buying merchandise using digital currencies, and it's supported by their own BTCS wallet for secure storage.
Infrastructure and e-commerce, that's quite a mix. Now, what about recent performance? Our sources, they don't detail the long-term stock trends, which really just highlights you always need that real-time data.
True, volatility is the name of the game here.
But we did see something specific, a notable jump, almost 15% on May 8th, 2025. The price went from about $1.67 to $1.92.
And what's really telling is the trading volume that day. It surged. 557,000 shares traded. That points to increased investor interest, likely tied to something specific.
Yeah, and it seems that something was the successful implementation of Ethereum's Pectra upgrade, which happened just the day before, May 7th. BTCS highlighted this event themselves.
Makes sense. A company focused on blockchain infrastructure, especially Ethereum, would likely see positive attention from a major network upgrade.
The Pectra upgrade is seen as pretty significant for the whole sector, right? Tech and security improvements.
Exactly. It represents advancement for Ethereum, and BTCS, with its focus on validator nodes and block building there, is kind of positioned to potentially benefit from that. The market likely saw that connection.
Okay, but context is key. Even with that price jump, the overall market sentiment around then was, well, bearish. The fear and greed index was at 39, suggesting caution.
It really shows you the push and pull in these markets. Positive company-specific news battling against broader market nervousness.
That really just underscores the volatility risk, doesn't it? Even good news might only give a temporary lift sometimes.
Absolutely. It's inherent in this sector.
Let's talk financials, or the lack thereof in our immediate sources. We don't have recent revenue, net income, EPS, debt levels right here.
Yeah, that's a gap. And it really drives home the point. For a full picture, you absolutely have to go to the official filings, the 10Ks, 10Qs on sec.gov, or check reputable financial news sites.
So without those hard numbers, we have to lean more on the qualitative stuff, the potential red flags and strengths.
Right. Let's look at those.
Okay, risks. Well, high volatility, we just talked about that. It's baked into blockchain stocks.
And regulatory risk. That's always looming over the industry. Changes in rules, globally or in the U.S., can have a huge impact.
Definitely. But on the flip side, strengths.
Well, that early mover advantage seems significant. Being one of the first U.S. public companies focused on blockchain back in 2014. That's a long time in this space.
Yeah, that could mean established relationships, know-how.
Potentially. And having diversified services. The infrastructure side and the e-commerce side could also be seen as a strength. Spreads the risk, maybe?
Or maybe dilutes focus. That's always the question with diversification, I suppose.
It's a fair point. Does one support the other effectively?
What about market sentiment beyond that one day? Our sources are a bit thin on recent analyst ratings or general news flow.
It seems the general feeling tracks the crypto market pretty closely. And regulatory news, of course. Public opinion online is usually all over the place. High risk, high reward is the common theme.
Sounds about right for crypto-related plays. Who are they up against? Competitors.
The sources mention Hive Blockchain Technologies and Riot Blockchain as key competitors.
So other public companies in the blockchain infrastructure space generally.
Correct. Competition likely revolves around market share, tech innovation, efficiency, and obviously financial performance.
Okay, looking ahead. What could drive things forward for BTCS? Potential catalysts.
Well, maybe new blockchain infrastructure solutions they roll out, or enhancements to that e-commerce platform could catch on.
And strong earnings, naturally. Good numbers always help investor confidence.
Always, that would
Yep.
validate their model.
And the risks looking forward. Still primarily regulatory headwinds and the chance of a broader crypto market downturn.
Seems to be the consensus. Those external factors are major variables for any company in this space. Their stock is likely quite sensitive to news on those fronts.
Let's try and weave in some of those deeper due diligence points now. The focus on Ethereum network infrastructure seems clear, especially with them highlighting the Pectra upgrade.
Right, and while we don't have the latest revenue figures here, that focus on a major network like Ethereum suggests where their main revenue drivers might lie.
And that Builder Plus operation you mentioned is not just running nodes, it sounds more sophisticated, like optimizing block construction.
Exactly. It seems to be about using algorithms to order transactions within Ethereum blocks to maximize the extraction of value, the fees, compared to just standard validation. Think sophisticated logistics for transactions.
So their competitive edge might really be in that specialization, that deep dive into the mechanics of Ethereum's infrastructure.
That seems plausible. Having a niche, especially a technically complex one on a major platform like Ethereum, could be a real advantage in a growing field.
Okay. And other points, no dividend, seems typical for a tech growth company.
Correct. Usually companies like this reinvest earnings back into growth rather than paying dividends.
And for detailed risks, cybersecurity, ongoing regulatory stuff, you really need to dig into those SEC filings like the 10K.
Absolutely essential. Those documents provide the company's own detailed assessment of risks, financials, and their strategy. Can't skip that step.
So let's try to wrap this up. BTCS looks like an established player, relatively speaking, in blockchain. Diversified services, potential upside from tech like the Pectra upgrade.
But clearly operating in a volatile sector with significant regulatory question marks hanging over it. And that lack of readily available up-to-the-minute financial data in our current sources means homework is required.
What's really interesting is that connection between the Pectra upgrade, and the market reaction, that price and volume spike. It shows how closely tied these companies are to the underlying technology's progress.
It does. Which brings us to a key question for you, the listener. How do you personally balance the potential upside of investing in these early-stage, tech-focused companies against those clear risks and the need for deep financial digging?
It's not always an easy calculation. We definitely encourage you to do your own further research, maybe consult with financial professionals who understand this space, and keep a very close eye on regulatory news.
Sound advice.
And if you found this exploration helpful, please do subscribe, like the video or audio, and leave us a comment. Let us know what other companies or topics you'd like us to unpack in future discussions.